Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the Asian Session Live Market Analysis webinar on 2nd of March between 5 and 5:30 GMT, giving the derived forecast for this particular week, 2nd to 6th of March. We are into the new month, and so the market is expected to show the month beginning volatile moves. So they are expected to make the trend reversal moves or the volatile moves during this particular time frame. So the derived forecast, each session, how exactly they are expected to make the moves, I'm going to explain with the help of a slide. Besides, we will also do the market reading by using the initial lows and the highs which are set around 3:30 GMT. We note down, and in the case of 4 majors and 2 commodity pairs, and try to relate it to that of the market levels from time to time to understand where exactly they are taking the market, either on the upside or on the downside, so that we'll be in a position to decide on our trades. Besides, we know the market is known to make some surprise moves, and sudden unexpected moves can happen giving any sort of excuse. So it can be a rumor, or it can be a sudden breakout of a news or natural calamity, etc. So in such a situation, it is not advisable for anybody to have the position open without the risk limiting factor. One of the risk limiting factor is stop. And many of the traders, they are advised to use the stop to limit the risk, but they invariably avoid it for the simple reason: if the stop is hit, then they will lose the position, besides lose the equity. So instead, they just try to trade without a stop. And instead of such a situation, you can use the hedge order to limit the risk. If it is hedged, you can review the market, and accordingly, you can handle the original position. So that trading strategy is the vital or the most important thing in order to consistently earn from the rubber market. So once we have the hedging facility, then invariably we develop the feel that we can watch the market in relaxed condition. So we need not look into the forthcoming data release or the news or whatever it is. And when suddenly any unexpected move comes, invariably the traders go for helter-skelter and find out what could be the reason or what happened, why suddenly such a big move has happened. And you know that during the month of December, we found the SMB news was released, and suddenly the USD CHF crashed. And as a result, you found that all other currencies also started showing the USD gaining move. And that is how they try to make such moves. And all along, you find that USD CHF is recovering. So these sort of moves might even force some of the platform providers to close their shop. But as trader, we need to protect our account. So if we fail to protect our account, then whatever be the forecast, whatever be the market reading we try to do, and if we earn in 10 trades and lose simply that account during such surprise move, then the entire process of earning becomes a wasteful exercise. So the best thing is focus on the trading strategy. Unfortunately, the analysts think that they have to give only the forecast and not the trading strategy. And hence, they try to use various types of analytical tools and try to give the possible expected market moves from time to time. So the fundamental analysts use the fundamental reasons or the excuse, and they say that you could come across the USD gaining or the USD weakening move. The technical analyst will say that, no, I don't believe in fundamentals, I believe in technicals. And so the market can technically behave differently because it has reached the oversold or overbought conditions, etc. So invariably you will find there will be a clash between the technical analyst and the fundamental analyst. And as a wire media, some of the analysts use both the technicals and the fundamentals, and then they try to give all the possibilities. Invariably, there are only two possibilities. The market can either go up or come down. And for these two possibilities, they do so many analysis and finally say that if at all if it goes, it can go up to this level, or if at all if it drops, it will come up to this level. That is how either way possibilities are being given. So invariably, the traders who follow come to the standing point where they started, because they do not know whether I have to do a buy and sell trade or a sell and buy trade. So in such a situation, you can follow anybody and at least follow the trading strategy, so that in the event if the market goes against, the trading strategy will try to limit your risk. So once you apply the trading strategy, then you will be able to understand the importance of it, how vital it is in order to protect our equity. Now let me give the forecast for this particular week. So it is the first week of March. So month beginning trend reversal moves are expected to happen. That is basically the volatile moves, but with the upward bias. So they will try to quickly make a drop in the case Euro and GBP and suddenly make a rise. So in that process, you will find buy and sell trade opportunities will provide, sell and buy trade opportunities will be much limited, because they will hold and quickly make a drop and reverse it very fast and go above the level wherein they started. So if you fail to book profit on the sell and buy, then you will be vulnerably caught. They will go to the higher level, induce us to do the short covering. So lower level consolidation with a downward stop and you know the stop and moves are quick moves and false moves. So it is difficult to capture the profit. And if you fail to keep stop at entry or fail to book profit, then they will go above the level wherein they are started, and you will find that we have to forcibly go in for short covering. So avoid that and instead be an opportunity trader during that of the trend reversal time. Whenever they make a quick downward move, form the new low and stop cutting the new low for 30 minutes, then you try to take a buy, then you will be able to see the quick rise followed by that. At that time, you can book profit. And since it is a trend reversal time, we can only do the swing trades, that is, quickly enter and exit during the sessions or within the day. But don't carry the position for a longer duration, because they will suddenly reverse the market. So today is 2nd of March. So swing and slide is expected during that Japanese session, followed by that swing and firm up and swing and firm up during that of the European and the US session. So it might be a very sluggish move. And tomorrow they are expected to make the swing and firm up, and also a quick rise and a quick drop during that of the European and the US session respectively. Then from Wednesday, we'll come across that they will start gaining the levels. So dip and rise and swing and slide, swing and rise moves are expected during the US session. And Thursday, you know that the ECB press conference and BOE interest rate decisions are going to be there, and they are expected to make a quick rise during that particular time in the case of GBP, followed by that of Euro. And slowly they are expected to gain the levels during that of the US session. And 6th on Friday, you know that non-farm payroll is expected to be announced by 13:30 GMT, and they are expected to make a swing and slide during that of the Japanese session, and then start gaining the levels before and after the non-farm payroll, and then continue to gain during that of the US session. So ultimately, the market is expected to gain the levels from that of Wednesday. So till such time, they will try to make either way moves and carefully trade. Then from Wednesday, you can try to do easily the buy and sell trades, buy during the quick drop and book profit during the quick rise. Since the market is going to be volatile, those who have got very less equity to trade with, avoid taking positions during the trend reversal time, because suddenly the market might behave differently. and you should be in a position to handle it. And if you fail to handle it, or if you are not kept the hedging order, then probably they will simply wipe out the account. And if you take the statistics from the broker platform providers, when exactly the margin calls predominantly being applied to the broker trading accounts, they will say either during the first week of the month or the last week of the month. Because the players make such volatile moves in order to handle the derivative market like the options and the futures. And those derived market, they are all leverage trades, and with less equity will be able to take more leverage position. So many people having lesser equity try to take positions during that time, and so the players are expected to make big either way moves to hit the stops on either side of such traders, those who hold the derivative positions till expiry date. So if you are trying to trade in the derivative market, try to close the positions before the last day, because the last day they will try to add unnecessary tension for you, and you may have to forcibly book loss. Whether you hold the put option or the call option, they will force you in such a way that you have to cut the position with the loss. So always keep in mind that in the case of the derivative market, you have to close the positions much early. Should not wait for maximizing the profit till end of the expiry date. Then next week will be the second week of March, and 9th to 13th of March, they are expected to make the swing and rise moves, and that could be with more upward bias, and you will be able to see that the market is slowly gaining that. Second week, they will gain slowly, consolidate, and absorb all the sellings and make the intentional move and rise. And from third week onwards, we'll come across more quick rises and profit booking, more quick rises and profit booking. And by end of March, we'll come across the market is really looking bullish. So at the time, people will say that do buy and sell trade, but at the moment, we'll find everybody might be recommending the sell and buy trade, but avoid that, because it may be easy to say do sell and buy trade, but it might be very extremely difficult to do sell and buy trade during such trend reversal times. So always try to identify which will be an easier trade and then try to focus on it. That is, you should be in a position to have sufficient time to exit and not quickly. And if you try to exit, if you are forced to exit in fraction of a second decision, then it might be extremely difficult for anybody to take a decision, because invariably you will try to find out whether I can maximize the profit or book the profit, or whether I have to allow the position to be closed with a loss, or the loss is high, so can I at least wait for the loss to come down so that I can close? This sort of decisions are vital, and it's bound to happen to every trader. And so when you're going for the lower, during the lower level consolidation with the downward stopping time, that sell and buy trade might be extremely difficult and might be a trap trade. So be careful with that. Now coming to the levels in which the currencies are expected to swing during this particular week. Euro could swing from 1.12 to 1.1550 area, GBP 1.5350 to 57 area. Then USD yen, so last time it was calculated as 114.50, but they may not drop it up to that, it appears. And so they are only expected to come down to 117 level, and they will swing here. And whenever they make a drop, and you'll be able to find that Euro and GBP start gaining, followed by that they will gain the levels in the case of USD and also. As I told you, every week they are gaining about 50 to 100 pips. In the case of USD CHF, they continue to gain the levels, and they are now comfortably trading around 0.95. Slowly they will go to 96, 97, and then dump the positions what they had taken and come to 95 and then take it to 97. That is how they will try to make the move and slowly go above the parity in another month or so. Then in the case of Canadian dollar, and they are doing the higher level consolidation around 1.2625 level, and slowly they are expected to come down to 120, 1.20, 1.19 area. The Australian dollar, and they are expected to slowly consolidate around 90, 78, and then quickly go to 80, 81 levels soon. So try to follow these levels and try to take the positions accordingly, and don't become bearish and bullish. That may give you a wrong signal, or that may induce you to take adverse positions. Now we'll do the market reading. So I noted down the initial lows and the highs, what they set around 3:30 GMT. So 1.1160 is the low, 1.1187 is the high. They are not breached the low or the high in the case of euro. And in the case of GBP, 1.5385, 1.5459, they are not breached the low or the high. They increased the spread in the case of GBP when compared to the euro in order to create the sentiment. And in the case of yen, 119.64 is the low, 119.95 is the high. They are not breached the low or the high. CHF 95.34 and 95.60 are the lows and the highs, and they are not breached. And in the case of Canadian dollar, 1.2503 was the initial low. They just breached it by 1 pip and staying below in order to make a slide. And 1.2522 is the high they are holding it. Then in the case of Australian dollar, 77.76 was the initial low. They just breached and gone below. 77.62 has become the low. 78.08 is the high. They have not breached it. So if you see that they have breached the initial low in the case of USD CAD and Australian dollar for the month beginning, they are trying to handle the commodity crosses and the commodity pairs as the contrarian move. Whereas in the case of the majors, they make the USD gaining move. So the majors are showing a nominal USD gaining move, but the commodity pairs, here you find Canadian dollar is showing the USD weakening move, and Australian dollar is showing the USD gaining move. But both have breached the initial low and trading below that in order to make some more downward move, and suddenly they will reverse from European session. Australian dollar on the upside when euro and GBP started gaining the levels. So keep in mind that they are handling in the sequential trend reversal first the commodity crosses and the commodity pairs. Later on, they will go in for the M crosses by making contrarian move, showing all the currencies in negative net change or all currencies in positive net change. By that, they will handle the EM crosses and EM. Then later on, they will handle the majors, euro and GBP, and also CHF. Then finally, European crosses, that is euro GBP, then euro CHF, then GBP CHF. Those crosses they will handle finally in the sequential trend reversal. So every time they will do the same way, you can identify by the month beginning they started with the commodity crosses. So after doing the market trading, while taking the trading positions, what we need to do is note down the initial lows and the highs around 3:30 GMT and find out where exactly the market is, whether the market is near that of the low or near that of the high. If it is in the middle level, there is no point in taking position. If they are near the high and not reach the high for more than 30 minutes, you can take a sell. If they are near the low and not breach the low for more than 30 minutes of your observation, you can take a buy so that quickly they will be able to show the move in your expected line. Then you can book quickly the profit after keeping stop at it. But before that, you find out what they have done with regard to the initial lows and the highs. Also look into that of the forecast. So the forecast says, say for example, until during that of the Japanese session swing and slide. Then you find the market reading, they are not breached the initial lows or the highs in the case of Euro GBP and all other majors. Only in the case of commodity pairs, they just breached the initial low. So they might make further downward move only in the case of CH, Canadian dollar and Australian dollar. A brief downward move might be seen in the case of Euro and GBP below that of the initial low. Other time you can pick up. Then later on you will find they will make a swing and firm up move and book profit during that of the firm. That way you can follow the forecast, what is given here, session-wise forecast, and then try to do small swing trades during this particular time frame. Now, these are all the market timings, and from third week we'll find that the market timings will change because you'll find the onset of the summer timings. So the daylight saving system will be incorporated. Then we'll find the timings will change. Till this time, we'll be using the timings what I've been following all along. So 0030 to 7:30 is Japanese session. 8 to 14 is the European session. 14 to 21:30 is the US session. And then there are gap times of 30 minutes between the Japanese and the European, between the European and the US, and 4 hours of gap time between the US and the next day Japanese session. And so I'll come back on next Monday. Thursday I'll not be able to present the webinar. Then Monday 9th of March I'll come back and give you the forecast for the next week. And tomorrow I have a monthly webinar, they're tracking the forex market together, part 1 and part 2. So there I'll be focusing more on the trading strategies. So you can attend both the webinars, and during the first webinar I'll explain to you why I am taking the positions, on what basis I decided to take the position, and also how I am using the trading strategy of hedging. Then part 2 I'll show the results of those trades and also further give the trading strategies and the ideas for the European session. So we'll be able to really understand how it is easy to take trading decisions, provided you keep our market reading technique as simple as possible. So if there are questions, you can ask me those questions here, and there are some questions as well. I'll answer those questions. And Richard has got a question. When you mentioned that the market will be seen in upward bias, are you referring to that of the major pairs? I'm referring to that of all the pairs excepting Canadian dollar, Euro GBP, USD CHF, and USDN are expected to make an upward move, but for the time being, USDN will be making a downward move. And similarly, USD CAD will be making a downward move. That's what the forecast for a long term. Hope it is clear. And RM, when is good to enter a trade? So probably tomorrow when you come for the webinar, I'll explain to you what are the conditions, preconditions by which you take a decision before entering into a trade. Then normal condition should be the spread between the high and the low should be more than 40 pips. So here in the case of Euro, there is not more than 40 pips, and in the GBP also not. And only in, Yen is not. In GBP, there is more than 40 pips spread. So there, once they make a dip and come closer to low, if not breach the low, you can take a buy. If they come to low and for 30 minutes, if it is not breached the low, you can take a buy. Whereas if it happens to be a gap time or the session start time, namely the European session start time, when they make a quick downward move below that of the initial low, understand it is a stop, and then once they stop cutting the new low for 10 minutes, we try to take a buy. then you'll be able to see the firming up. At that time, you can put profit. Your initial target will be near the high. And if the going is good, you can maximize the profit using a trailing stop and also the trailing limit order. Then in the case of yen, also not. And in the case of Australian dollar, yes, the spread is 40 pips. Then you can think of taking a position. Already it has dropped and cut the low and staying below the initial low. The best thing is wait for the new low not cut during late session. Then you try to take a buy position. Any other question? Okay, in this window there is a question. Shan has got a question that Euro GBP seems to be bottoming around 0.72. So it is time to take a long Euro position or wait for another month. As far as Euro GBP is concerned, this cross, if you remember carefully that they started from that of 0.71, because earlier, if you refer to about 7-8 years back, Euro GBP used to be trading around 0.70 to 79, and it has come down to 0.68 once, and then subsequently come to 72 and then go below. So you just watch how they are handling 0.71, because as you notice carefully that GBP they are not dropping much, whereas Euro they are dropping more. It shows that they wanted to come down further in the case of Euro GBP, probably to 71 area or 70, and then start reversing it. Because earlier they came down to 0.68 in 2003, 2004. So before the Gulf War. So you just watch carefully, and so don't think that it is the bottom. So wait for the new lows to be set and then try to take a buy position, and they will take it to 0.89 again. That's the normal story. They make one-sided move in the case of these European crosses. They do a lower level consolidation and then shift in trading zone. Once the shift in trading zone has happened, they will not look back. At that time, you can simply hold the position. The best thing is do the currency conversion trade. When it comes to 0.7071, you convert your GBP to Euro. And then you will find Euro start going up. And you can convert back Euro to GBP later on. That way, you'll be able to really make good profit. Then Jen has got a question. Where do you see GBP reach for a low? The GBP low could be around 0.5375 area, not more. Euro, they may just make a brief downward stop in order to create the sentiment if needed, but they will not make much of a drop. Is there any question? So if you've got any question, you can ask me. Okay, there is one. Likewise, Euro is Australian dollar, Euro AUD, also likely to test below 1.40. Yes, possible. Because Aussie, they come closer to the low. They may come probably another 20-30 pips and then hold around and then start gaining the levels. Any other question? Okay, then Jen. Where do you see GBP reaching or get answered? So GBP, do you see it to 1.5320? Because it is a trend reversal time, so I am not, as per my calculations, expecting a drop to 1.5320. If it goes, then I'll not be surprised, because they know very well where the cluster stops are. Then accordingly, they try to hit the stops. And it is expected to come to around 53.75 level and then start gaining. Then what is your outlook on USD CAD for March? Lamshali. So USD CAD is expected to come down drastically after this prolonged consolidation at a higher level. And you know that they have created the impression that USD CAD, because of the oil price, has weakened. And I mean, it has come to that 1.2527 levels. And then finally, you will find that USD CAD is expected to come down drastically. And you may not come across corresponding gains in the case of oil, but they will use some other news to do that. Then Kartik, Euro USD market talk is to drop to 1.09. Then it will move up. Is this a level can go? See, anything can happen in the market during the trend reversal time. So keep your fingers crossed and try to see that you are adequately protected by using the hedging order. But I'm not envisaging much of a drop in the case of euro during this particular time frame. They will create, and you know, whenever these things are spoken in the market, invariably you find that the players don't bring it, and suddenly when everybody turns bullish, they bring it. So you have to be very careful. Any other question? Okay, no more questions. So I take this opportunity to thank FX Street for the facilities provided to give the webinar. Tomorrow I'll come again and present the Tracking the Forex Market with the webinar part 1 and part 2. Kindly attend and understand about the trading strategies, and then I will come back next week, 9th of March, and give the next week forecast. Wish you all happy trading. See you tomorrow.